broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call. We're coming to you live from the CNBC TV 18 Motilal Oswal studios here in Mumbai. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, good morning.
Good morning.
Starting another day and fingers crossed. Yesterday was a down day and one hopes that maybe, we get out of it soon enough. Let's just quickly tell you what the global setup is looking like. It's not looking very positive. I think that is the one thing which one has to point out. And the reason is very simple. It's basically the payrolls hangover, the payrolls pain, or whatever you want to call it. But, the jobs data on Friday out of the US for the month of January was so shockingly strong that it's shaken people. People are asking whether the labor market, if the labor market is so strong, how can the Fed take its foot off the pedal? How can they do one more 25 and be done with it? Won't rates have to go higher? So that debate is raging and a market suffered. So what is the dynamic that you have? You have the Nasdaq, which was down 1% last night. So that's, of course, tech, which is long duration stocks, which sold off. You have bond yields, which have surged. The 10-year is now at about 3.62. That's about 12 basis points higher. The 5-year was up 17 basis points. These are large moves. And you've got the dollar index. It was looking closer to 101. It's now closer to 104. So, this is basically the global picture, which I think is exerts some pain broadly. I'll get to more on this just a bit. But, just today, later today, you have the Fed Chair Powell who will be speaking. He'll make a speech and markets will wait to hear from him. He is the man. He's the guy on last Wednesday who said disinflation 10 times and got markets very excited that maybe, the Fed is finally listening to inflation data coming off. So if later today he kind of backtracks a little bit, he pays attention and focuses on the jobs data, which is very strong and strikes a cautious tone, I think markets will take note in a very strong fashion. And of course, the opposite is true as well. So that's something which we will watch out for. Coming to the market here, I'll get to Nifty and Bank Nifty straight up. For the Nifty, we lost about, 80, 90 points yesterday at close, 0.5%. The 20-day is still the relevant reference point. That stands at 17,893. That's a resistance on the upside, which I think comes into play. And of course, the budget day low at about 17,353 is the reference on the downside. You can look at the daily Bollinger Bands, etc. That comes in at about 17,500. The very, very, very near term would be the 17,500 kind of zones. Bank Nifty seems to be in a bit of a better shape as compared to the Nifty. It lost about 1/3%. The 20-day there is 41,781. And on the way down, the near-term level is, as I said, the daily lower Bollinger Band, which is at 40,147. These are near-term pivots which you would want to use if you're trading. Where to put supports, where to put stops, etc. Just one more thing, and this kind of ties back to the changed global situation. The rupee is under pressure, severe pressure. The rupee has lost over 2% against the dollar in the last 10 sessions flat, right? It's now closer to 83. The previous high was 83.3 to a dollar, and that's basically from where it kind of snapped very sharply and turned. And back then, there was a fair bit of chatter in money markets that the RBI intervened. An interesting statistic, the last time the dollar rupee was at 83, the dollar index, the DXY index was 115. The dollar index now is closer to 104. So the question is, will the RBI step in to protect the currency once again, now that we are closer to the 83, the previous highs or so? That is an important dynamic for equity markets as well, which we will talk more about a little later. Guys, hi.
Hi, morning. In fact, across the board, right, the US markets, the European markets have all ended in the red. So in that context, the global handover is not too great either. There was no major sell-off, but a close in the red for sure. Even for our own markets, the Nifty continues to face resistance around that 17,800 mark on the upside. And the bulls are sort of on the back foot after what happened in the last few days. There was selling to the tune of almost 1,200 crores from the FIs yesterday, and put together in the last 3 trading sessions, just in 3 trading sessions, the FIs have sold about 5,200 crores. In terms of data this morning as well, results not looking that great. Tata Steel's numbers were weak. The European business is under quite a bit of pressure. That whole pocket, actually, the European market has been suffering quite a bit. So all the companies that have an exposure there are seeing a slowdown in growth. In fact, Apollo Tyres in their conference call said that Europe is looking very challenging even in the first half of the new fiscal. Apart from that, Adani Group stocks will of course be in focus. There was a recovery yesterday. The promoters are reducing their pledges. Adani Ports was up 9%. So we'll keep an eye out on that. In terms of results today, there are big numbers. There's Bharti Airtel, there's Adani Ports, there's Ambuja Cements, a lot of companies in the capital goods space as well. So we'll watch for that. And tomorrow is the RBI policy, although market people believe that a 25 basis points rate hike is something that's perhaps priced into the market. So it's not market moving in that sense. Perhaps a range for the market, and the 17,800 on the upside could prove to be a bit of a resistance zone. But other than that, I think it's, a lot of the to and fro with respect to what comes out of the Adani Group and the global markets that continue to put a lid on the game.
Well, yesterday was a far better day than what we have seen in the past. The last 7 days, the average between the high and the low is around 330 points. Yesterday, the difference between high and low was only around 120 points. So it seems that maybe we're getting at least into a phase of stability. At least that's the hope. The other factor yesterday was, though the Nifty ended in the red, you had the broader markets that outperformed, both the mid and the small cap indices, and I like that. Portfolios feel good when the broader markets perform. And everyone's talking about the Adani Group stocks, and yesterday some of them did pop up and trade. But most of them were all F&O stocks, the ones that are available in the derivatives market. So possibly there is some short covering that's taking place. Otherwise, a lot of those cash market stocks, they continue to reel at lower circuit, whether it's Adani Power, Transmission, Green, Wilma, all of them were at lower circuit in yesterday's trading session. So, if things are going to get resolved, then maybe at some point of time, some of these cash market stocks as well could see some green. Then you'll be far more relief. For the time being, it appears there is more short covering that's playing out. What are the FIs doing in the F&O market? They added short positions. They added short positions, big time, close to 22,000 short contracts is what they added. And now their short positioning has moved to around 85%. I've seen it in the past when it goes from 85 to 88% odd. We see a bit of a short covering bounce that plays out. Can we get some good news from somewhere? That's what could take us closer to around that 18,000 odd mark. For the time being, though, they're positioning themselves quite bearishly because they wrote 1.3 lakh calls in the ratio of 5 calls for 1 put, telling you that at higher levels, we are going to see supply. What were they writing? 17,800 call, 18,000 call, 17,900 call. Between 3 of them, they added close to 80 to around 90 lakh shares. So aggressive writing is what we saw at those calls. And the Nifty Bank, that was beginning to find its mojo or its rhythm. Yesterday, in fact, there was some writing out there. More than 10 lakh shares were added at 41,500 call. So for these call writers, if they're going to pocket the 300 rupee premium, then in fact, they are putting in a resistance at around 41,800, 41,500 plus 300. So you're getting a resistance zone out there. And in fact, that's where the 20 as well as the 100 DMA of the Nifty Bank are around. On the downside, we last bounced from around 40,700. So I'm counting on that level holding out as well. For the Nifty, well, today we're likely to start off with the resistance zone, going by the SGX Nifty. You have the 20 DMA out here, and also you have yesterday's high that's at this particular resistance level. So 17,850 is a very crucial mark. If we can get above that and trade above that, then it's good news. But I think we'll be met with some resistance from the word go itself. On the downside, 17,600, a bit of a support. We're going to start off in the green. Holding on to that is going to be very, very important. I think that gets sold into at some point of time, though. If you're looking to buy, you'll need to look to buy closer to around 17,600.
All right, Nigel, thanks for that. Well, before we start and get the ball rolling, let's quickly tell you what's lined up here over the next half hour or so. We will get you the latest updates on the Adani Group crisis and discuss the broader implications with Marco Papik, partner and chief strategist at Clock Tower Group. Later, our research team will bring you CNBC TV 18's list of top 10 stocks for the day. And at around 8:30 a.m., we will do a fundamental stock analysis with Deepan Mehta of Elixir Equities.
All right, let's get you some views now on the equity markets. First up, we have a comment coming in from Gautam Dugad of Motilal Oswal Financial Services, who expects the markets to be range-bound. In the absence of any large cues, he says the market is likely to derive cues from global markets and from corporate earnings. They have seen positive earnings coming through from the likes of SBI and ITC and would accumulate these at current levels. They already have both SBI and ITC in their portfolio. He also says BFSI and tech stocks have met expectations this earnings season.
Well, some money market views. Bhaskar Panda of HDFC Bank says robust US jobs data has pushed up yields, forcing a rethink on terminal Fed funds rate. He says the dollar index has rallied, riding on this as mild risk-on sentiment persists, forcing Asia ex-Japan currencies lower against the US dollar, even as oil is sideways. Given this background, he adds the INR lost almost 1% against the dollar, forcing the dollar INR pair to trade at 82.75, closer to 83. Yesterday, Bhaskar says things look to be calmer today, and hence he expects the dollar INR pair to trade in a range of between 82.5 to 82.8 to a dollar for the day.
All right, and on the bonds, Bhaskar Panda says Indian benchmark bond yields have settled in a bit higher as participants await RBI's policy due this week. Meanwhile, he expects the 10-year benchmark yield to trade in a very narrow range between 7.3 to 7.35% at the moment.
Well, there are a lot of stock-specific action they're going to be tracking for you, and we'll get to that in just a bit in our special Top 10 segment. Well, we're looking at Adani Transmission, Apollo Tyres, Muthoot Finance, and JK Paper. They are stocks on the back of positive news flow, while on the flip side, you have Tata Steel, Hindalco, LIC Housing Finance, Balaji Amines, V-Mart Retail, as well as SJVN. They are stocks that could open up potentially in the red.
All right, Marco Papik is joining us now. He's partner and chief strategist at Clock Tower